increasing, decreasing? Are we in a buyer's market, a seller's market? And what the heck is going on with prices today? What's happening in our real estate market nationally, California, Nevada, and Idaho? We're going to talk about those because thinking about it is enough to give me Italian brain rot. The heck is that? Italian brain rot. Well, let's have that be one of the things we talk about tonight here. Where we're going to be talking real estate, mortgage rates, and real talk. Welcome to Cash Talks. First off, I got our infamous lender back on again from Glendale, California, Mr. Dave D'Souza joining us. Welcome aboard, Dave.
Thank you, brother. Good to be with you.
Man, I'm glad you made it. I know you're busy running around. We also have on another special guest tonight, too, out of Westlake, California, selling the big luxury homes over there, better known as Westlake. Eddie Beghe is on with us. Eddie, how are you doing, buddy? Come on in, man.
I'm doing good. Thank you for having me. How are you doing?
Again, I know you're busy running all around out there with real estate, too, so everybody's going to appreciate the crew that we have on tonight to talk about what's going on with our inventory, what's going on with our market, especially in California right now, and what this Italian brain rot's all about, because this is something that's just gone viral, like all over the place. Crazy, right? And if you have kids, you got to know what Italian brain rot is. It's not just a mental state of mind, right? It's more than that. It's a lot going on. So let's get into that. But first, Dave, could you tell us a little bit about what's going on in the mortgage world right now?
Yep. Let me give you a quick recap of what's going on with the markets. It should be short. As far as interest rates go, fairly flat week last week. We ended the week about 0.1% higher than the week before. Very slight deterioration of that today. Stocks ended the week about 5% higher, largely because of the China offering China and the U.S. agreeing to a 60 to 90 day hold on the tariffs, which have been spooking the markets for a little while here. That had a very positive effect for the stock market, i.e. your 401k, your IRA, and your stock investments. We saw about a 5% improvement from previous Friday to last Friday in stocks, but a very slight deterioration in rates. And a lot of times money that flows from the stock market into the bond market will cause, especially when the stock market rallies, we can see a slight deterioration in the bond market. So that's kind of what happened there. Outside of that, pretty flat week last week. And we'll see what happens this week.
Pretty flat week. Okay. Thank you for that, Dave. And where are our interest rates at today? Where are we sitting at now?
Well, as we sit right now, I'm at about a 6.6% is our par rate. Par meaning you're not buying up or buying down the interest rates, basically at par. Typically, our rates are about 1/8 to 1/4% better than most of what you'll find out there. But that par rate was 6.5 2 Fridays ago, ended up at about 6.6 last Friday. So very slight uptick.
Okay, fantastic. So went up to, we were getting up to 7% right around there again just a while ago, right? And then I know you were down to about 6.5, and then it shot back up a little bit for your par rates. But gosh, you're already back down to about 6.6.
I've seen our par rate recently was about 6.75. And it's
right. Okay, that's
back down to about 6.375, then 6.5. So it seems to be floating around the 6.5 mark, give or take a little bit.
Gotcha. Okay, fantastic. That's not bad, folks. That's not bad. If Dave's able to pull a 6.6 for a par bar right now, that's not terrible. That's something to think about. How are mortgage applications going? And also, how about refinancing? Where's everybody sitting on with that?
Well, refinancing is definitely a very different market because we went through a refinance boom where a lot of people most of the people that could refinance ended up in the 2s and the 3s. So most of those people, a large number of whom we've referred to affectionately as interest rate prisoners, are not wanting to touch that 2% something or that 3% something or even that 4% something. And so what we've seen a significant uptick in is home equity lines of credit. Home equity lines of credit, home equity loans, where people are saying, well, I don't want to touch the first trust deed that I have because it's got a fantastic interest rate, but I will take some equity out on a second trust deed or home equity loan or HELOC or something like that. So that's essentially what's happening with the refinance versus home equity. Purchase applications are not as high as we'd like them to see. They're steady, but they're definitely not where they used to be for two primary reasons. One is inventory, and then the second one is a combination of inventory, and then of course the other piece is interest rates. I will say this in the field for interest rates: if you're waiting for the 2s and the 3s or even the 4s, you're going to be waiting a very long time. If you're serious about buying and you see interest rates from anywhere where they are to even close to 6%, it's time to execute. With the market the way that it is, barring some catastrophe, a natural disaster, a war, another pandemic, it's extremely unlikely that we're going to see rates in the 4s or 3s or 2s anytime soon. My suggestion would be, if the payment's right and the house is right, even if you have to adjust the price of house that you might end up buying,
right.
Where we're at 6.5 now is not a whole lot worse than where I think we're going to table out. Maybe if we see in the high 5s to 6-ish, I'll be very happy.
Fantastic. Yeah, me too. And I agree with you 100% that waiting for those rates to come back down, something like that, if they ever did, something catastrophic would have to happen, and nobody wants that to happen at all. So, and I know we've talked about that in past episodes. So if you are out there listening today, hey, do us a favor, go ahead and subscribe and hit a like for us. We appreciate that. It helps our channel grow. And that way we can keep bringing you great information up to date from the trenches, information from those that are working in the field every day. That's what we do. And we want to bring you the information as it is in real time and in the real world, right? So hoping everyone can appreciate that. So let's talk about inventory a little bit, because that's what's happening right now. That's what's really dictating the pace and sales in our market. And of course, coupled with interest rates, and that's going to really show us what our demand is. So our supply, the inventory, has picked up quite a bit, actually. Well, not terribly, but we're still below norm levels. But we had about, where are we at now right now? We're at about 33% increase from this time last year nationally. And we're up to just around 767,000 active listings in the United States right now, where this time last year we were at 739,000. So that represents a little bit over a 33% increase in inventory. So I have a feeling, Dave and Eduardo, tell me what your thoughts are on this, but the way inventory has been stacking up lately, I could see in a couple of weeks hitting that 800,000 threshold. What do you guys think?
Well, I think we're definitely approaching more of a buyer's market where sellers are going to come down to planet Earth and negotiate and give some concessions. So, but like Dave was saying, it's a weird market. I see a lot of people still on the sideline. They're not really making a move. They're not even making lowball offers. They're just sitting and waiting.
Right.
If you love the house, and you're able to buy it despite the rate, date the rate, marry the price. So it's
Right.
go for it.
Right.
But we'll see what happens in a few weeks.
Yeah, I think to Eduardo's point, when you look at buyers or sellers for that matter, but specific to buyers in this market, there's serious buyers and then there's hopeful buyers, right? The serious buyers are the ones that says, well, the price may not be ideal, the rates may not be ideal, but I want to buy.
Mm-hmm.
I need to buy. I want to buy. I'm going to buy. I might negotiate the price. I might be a little particular about the house, but I'm going to buy. And then there's the hopeful buyer that says, well, I think I'm going to wait for rates to come down. Well, I think I'm going to wait for prices to come down. And the minute you hear somebody saying that, it's time to just check in and say, look, check into yourself and say, hey, how serious are you about actually buying right now? Because if you're saying, it's like, all right, well, I'm not sure I want to buy now. Yeah, but if it's a sunny day and it's 66 degrees outside, then maybe I'll buy. But if it's not, then I won't.
Right.
And so that's what I refer to as the hopeful buyer. If rates came down into the 3s and 4s and prices dropped by even 10%, mm-hmm. buyers would be climbing all over themselves. And then it might be, you would have a situation where, okay, fine, I'm ready to buy, but so are 10 million other people. So I think that's sort of, after having done this for over 32 years, especially with the number of buyers that I work with, there's the serious buyers and then there's the hopeful buyers. Same thing like sellers. There's the serious sellers and then there's the hopeful sellers. Hopeful sellers might price it above where it is and say, well, let me price it higher and see where it is and see what I can get.
Yeah, Dave, that helps me.
You folks are the realtors. You have much more experience with this than I do. So maybe one of you wants to offer a little feedback there.
Well, Dave, I'll start out by segueing off that into the seller side of things with the pricing strategies that we have to talk to sellers about. So we typically have about 3 different pricing strategies. We've got to find out which one's going to work best for the seller, and they're all fine, right? So aspirational pricing, right? That's where you could price it up here and leave room to negotiate down, because most people feel their home is worth more than everybody else's when they're selling their home, right? So aspirational pricing is one strategy, and see how that works for you. And then there's fair market value. We got to find the range of what's fair market value for these homes. And then you want to try to see if you want to go a little on the lower end of that range or the higher end, or right somewhere right in the middle. There's that strategy as well, one that I really like. Third option is event pricing. They could set event pricing on it, meaning they're going to come down low. Some have titled it auction pricing, no, but we don't want to go that low, because you get too crazy low, you get all the ridiculous people, that are really not looking for a house. They're just looking for some cheap deal, coming in right in $1 or some crazy number like that. And then kind of odd people too. So we don't want all that parade and circus and all that, right? What we do want, though, is we do want attention. We want activity. We want people seeing the property and coming to the property to take a look at it and make offers. This is how you get houses priced up, sold in a weekend, sold over asking price. You find a price range and you get a little aggressive with it. Okay. You don't have to go crazy aggressive, but find where that range is with your good agent that knows the market and knows how to look at the comps and understand what's going on currently in the real estate market. You have to pay attention to all of them, right? So taking that into effect, let's come up with the right pricing. And that's going to be a big game changer for how your house is going to move. And if you do price it on the lower end, some people are not brave enough to do that, but we have to have a real strong conversation about that so I could enlighten them on the benefits and the negatives of that and how that would all apply in today's world, right? So once we've done that, we set the price, and then usually it's going to be over here. The aspirational pricing really is not a way to go. And the problem in the market has been that it's been a seller's market for quite a while, and people have been doing that and getting lucky with that quite often, actually. And agents that come on and throw it on the market and see what sticks. And, someone comes along because, you're getting 5-10 offers on a property, although that has slowed down lately. And we've gone from that seller's market to a little bit less of a seller's market. And now, quite honestly, maybe Eduardo could attest to this, that we're seeing just a slowdown. The inventory is picking up. Days on market are increasing. I know the average days on market in California is about 40 to 44, right? And Santa Clarita, that's definitely what it is, right at 44. Nationally, you're about 50 days on market is the national average for that. And this is for houses. And Eduardo, what are you seeing? Are you seeing a slowdown a little bit? You seeing
I'm seeing a huge slowdown. Even if you price it at times within the comps or below the comps, never seen it happen in my life. You put a property on the market a week, 2 weeks, no calls from brokers, just very few showings. The open house, they do okay, but it's just I think a lot of buyers are just on the sideline. I'm working mostly with people that have to move because of space, upsizing, downsizing, death, divorce.
Right.
But if you're sitting comfortable or somewhat comfortable with a 2, 3, 4% rate, have a lot of those sellers that, we'll sell if, we get this price, and then, but they don't have to, right? So those sellers, then when you approach them with the price reduction, they're still, I think the mentality takes a while to kick in, that we're approaching what it could be more of a buyer's market. And they're still, they remember, 2021, 2022, 2020, when prices were crazy and anything that you put, it would stick. Now it's not that, but, it's easy for us to say because we're, realtors. We're not selling our house, at least not. For a seller to come to the realization that, there's a lot of competition, a lot of similar property. If you want to send out, you have to price it, I guess, unless you're fully remodeled, but at the competition market or below the market. So to get activity right away. If not, like you said, 40, 50 day, totally normal.
Right. Oh, thank you, man. I appreciate that. So
can I interject something here on the heels of what Eduardo said?
Sure, Dave.
From a buyer's perspective, can either of you comment on the consumer confidence piece of it? Because obviously for someone to take a step back and decide from the buyer's place, let's say they're not necessarily selling a home, maybe it's a first-time buyer. What part of the consideration is, well, how confident am I in the economy? How confident am I in my job? How confident am I in my ability to be able to afford this new house? Consumer confidence, at least up until fairly recently, and I'm not sure what direction it's going here because there's more readings coming out, but it wasn't particularly healthy fairly recently.
No.
And so
True.
one would immediately think, well, if consumer confidence is down, how likely are people to jump up and make close to the largest purchase of their life?
That's a
Yeah.
stellar observation, Dave, 100%. And I think it plays into the demand end of everything with our buyers just as much as the interest rate does. Because the interest rate could be low, but if the consumer confidence is low as well, not much is going to be happening, right? Got to have good consumer confidence. And then, if you could couple that with at least a decent interest rate. And Dave, tell me what you think. But I think if we get down close to 6%, that's gonna be a rate that's meaningful. We're gonna see movement. I think at 6%, we're gonna see people get off the fence a whole lot more at that 6% level.
I don't think it's I mean, the rate is one factor, but it's not the main factor. It's not the only factor. Last year we had high rates. People were buying. They were buying a hell of a lot more than this year. Now I don't want to get, political or anything, but there's a lot of mixed emotions on the way. There
A lot
isn't
of
like a
concern.
clear game plan on what's going to happen, because there's news every single day. We're going to do this, no, we're going to do that, then we're going to do this. Buyers, I wouldn't want to be a buyer right now. It's like spooky. And then if you have your down payment that it's tied into an investment portfolio, takes a dive, then it goes up. It's like there's so much volatility. You can't, expect the regular people, not the, the stock wizards to buy in this market. It's a little scary. It could be intimidating. So I don't, I don't judge them for that. It's just if you can afford the payment and it's the house and it makes sense, then go for it. But not everybody's on the same page.
Agreed, 100%. I experienced the same thing, and that's why, Eduardo, right? We got to have him talk to a good lender first thing.
Yes.
Unless you're paying cash, you're paying all cash. Okay, great. Let's go.
Unless cash is
I
paying.
would agree completely, and thank you for that, Cash. But all the different things you guys are saying, the interest rate, the price, I think it really comes back to these are all components of the consumer's confidence. If the interest rate is right, but they're not confident about their ability to sustain an income, then arguably the interest rate doesn't even matter really that much. Because on the flip side, if the price is right and the interest rate is right, but they open escrow and then somewhere during there, one of the buyers is thinking, well, with all the stuff that's going on right now, I'm not sure about my job. So I think there are many components, like Eduardo was mentioning.
Yeah.
There are political components, there are geopolitical components, there are economic components, there are financial components. There's all kinds of different components that play into this larger picture. And I think the key piece, and Cash, you'd highlighted this a couple of our podcasts ago, how important and how relevant consumer confidence is.
Absolutely.
There could be any number of things, but for a client or a consumer to decide, we're going to pull the trigger on this.
Right.
All of those have to sort of come together in some form.
They
where
do.
They feel confident enough to pull that trigger.
True, but I got to be honest. In my observation, there's not a blanket opinion, I guess, for the whole nation as far as who's feeling comfortable about the economy and who's not. Because there are plenty of people that are feeling absolutely fine about the economy, and they're making moves, right? And when you see a market start to produce itself like it is now, or present itself to the market where we're slowing down, we're seeing more inventory, and this is more of an advantage for a buyer. If you really are looking to buy and you're financially sound, that's the big differentiator, right? As long as you've got your numbers and your finances in place, you got a solid job or your company you're working for, everything feels real solid, then great, go for it. It's going to be to your advantage right now. But if you wait till those rates come down to 6% and the economy's all booming again, and then you decide to make a move, guess what? You're going to go up against a lot of offers, a lot of competition, and prices increasing while you're doing it, right? Eduardo, can you guys agree with that?
Yeah, I agree, but I a little disagree in the sense that the market is telling you, you're saying some people may feel confident. I'm saying that the majority of buyers don't feel confident. That's why there's properties are sitting, not even, unless it's like a smoking deal, then they'll make a move. But if they don't need to buy, or have a lot of cash for down payments,
Right.
Buyers are not buying. And I could tell by the showings, the open houses it's just like we're in a, I don't know, in a lull a little bit. We're in a standstill, like stagflation or however they call it. It's a little scary, and I'm hoping for good positive news. That there's going to be more, good news when it comes to tariffs, but it could be anything else. Who knows where we're gonna go in the near future.
Well,
So
and to the point that you just made with tariffs, there is the potential, and whether this is right, wrong, or indifferent, it's not the reality, it's the consumer's perception that matters.
yeah,
So if the consumer's perception is they don't know that much, but they're hearing tariffs, 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 the first thing that anybody's thinking is higher prices. And they're thinking, well, tariffs, higher prices.
yeah,
What if I'm going to buy this house, are my groceries going to go up? Is my car insurance going to go up? Is this going to go up? Is that going to go up? So I think from a broader perspective, like you said, there are many, many different factors that tie into this. And the economic, the political, the financial, they're all sort of tied in a certain way.
Sure.
I think at the end of the day, if you have a consumer, now there's something else important that Eduardo said a little while ago. There's a lot of like as an example, if you have a divorce, if you're getting relocated by your company, these are situations where you have less choice. You have to buy, you have to do something.
yeah,
Right.
yeah,
But in the situations where people are not necessarily forced, that they could either keep renting or they could keep living in their house, and they could buy, but they don't have to buy.
Exactly.
That is where the consumer confidence and the whole piece comes in. And I would tend to agree with your thought, Eduardo, that there are people that have some confidence, but the number of people who are reticent, who are reserved, who are somewhat held back,
yeah,
is greater than the number of people. Now, to Cash's point, Warren Buffett's famous phrase, right? When the market's down and everybody's selling, what is that? That's the time to buy.
Time to buy. Let's
Because
go.
there's going to be less competition. So my point is that there's some validity to Cash's point as well.
yeah, absolutely.
Thank you for
If
that,
rates
Dave.
come down and prices come down, then you're going to have 10 million other people offering on the same house you make. So it's, you got to find some happy medium in there.
Can I sprinkle just a little bit of salt in your wounds for the both of you guys? Okay. Listen, and I respectfully appreciate your opinions, and I agree with a lot of it. Okay. But here's what's happening on the national level. Okay. Let's look nationally right here. Last year at this time, we had 400,000 pending escrows right now at this time last year. Today, we're at 409,000.
409,000, so 9,000 more pending sales.
9,000 more pending sales today over last year. So there's a little bit more. But here's the other thing, though. We also have more inventory. We've got about 33% more inventory nationally as well.
There you go.
Okay. So
and also, if I may, Cash, interest rates today are about 0.5% better than they were a year ago.
Right, and that helps.
Even though they're not as good as we want them to be.
Right.
They're about 0.5% better than they were a year ago.
So to my point, yes, it's slower. Obviously, it's slowed down because our inventory's increased and the rates have increased a little bit, and we've got consumer confidence is not improving so much right now, I guess, is what I'm hearing. But it's a mixed bag. It depends who you're talking to at the end of the day. But overall, yes, I agree with what you're saying, that there's a consumer confidence challenge, right? But there are 9,000 houses sold more this year than last year right now. So it's not bad, I guess, is what I'm trying to say. It's not bad.
Without pointing any fingers, and in any flavor of politics, I think from a broader concern, and this is reflected in Wall Street also, I think there are, to Eduardo's point, there's a number of consumers in this country, justified or not, that are concerned.
True.
And when people are concerned, they think twice about spending. Now, I'm not saying their concerns are valid or not. I'm just saying they seem a large number of people. And to your point, Cash, there are certainly people that are not. There are people that are spending. Obviously, there's houses being sold.
Right.
I think if we have more of our consumers getting a little bit more confident in their ability to spend, then we'll see some movement in the market.
Right. Dave, you follow the economics pretty good. Where are we at with our jobless rate and those kind of numbers right now, which are indicative of how people are feeling about the economy overall?
Unemployment has been fairly stable around the 4-ish to 4.1-ish range. Now, there's a caveat to that, and I don't know how much this is going to play out, but there's been a lot of layoffs in the government in the last 30 to 60 to 90 days. And I don't know when those numbers will start to reflect in the unemployment, but from a number of sources, I'm aware that those numbers have not completely filtered themselves into the figures yet, because
Gotcha.
there's a lag. So I don't know how much effect they're going to have, because those numbers compared to the national average of employment may or may not. But the combination of the tariffs, along with a lot of the unemployment that's come, I hope we don't see an increase in unemployment. But that remains to be seen. I mean, it's been fairly steady in the 4.0 to 4.2 range. You know, like I said, I hope it stays there and improves. But there is yet to be seen, because a lot of this data is lagged.
If I had to come up with one word to describe what is probably the reason most people are having this consumer confidence challenge right now, the one word would be volatility. That's just, our economy and our market and our world has been so volatile lately. It's been concerning. I think that throws a lot of concern, a lot of caution to the wind for a lot of people when you've got.
Couldn't agree with you more.
Exactly. Eduardo, how about you? We on the same page, pal?
I agree 100%.
Hey,
people love stability. They are very, very off-put by volatility, because by definition, volatility means unpredictability.
Right. If anybody listening out there, you have any questions at all, go ahead and chat that into us. Let us know. Ask us a question anytime. We're always here to help. And even after this, any questions for any of us, give us a call anytime. We're happy to help always. Let's get into this last part. This Italian brain rot that we were talking about a little bit earlier, which has just gone viral, mad, crazy. I don't know if anybody's seen this or you know what we're talking about. It's not just the state of mind, but what the definition of brain rot is let me see now where to go. Let me find it. Our brain rot. Oxford's word of the year is brain rot for 2024. Can you believe that? That's the word of the year. Now, does that have to do with this show with these memes that are these hybrids of animals and different people and objects and different weapons and other things that they're making these hybrids with animals? Like, you've got planes with crocodiles in it, and have you, Eduardo, you've got kids. If you got kids, I know, Dave, your kids are a little bit older.
Well, my kids love it, but I'd like to hear you name some of them. Because they have great names.
With your Italian accent.
With my Italian accent.
Not.
Okay.
And by the way,
what are you doing to me, man?
As Italian, they're not really Italian. They're like Italian sounding. But my kids are like, what are they saying? It's like, I have no idea on what these characters are saying. They just sound Italian, but it's not really. Yeah. It's not really Italian. Let me just throw that out there.
Yeah,
but
that's funny.
They're fun to watch.
Yeah, I've been at your house several times where I've seen the English going on, and then all of a sudden it converts to Italian, and I'm like, okay, what are they saying? Right? But it's okay. It's all good, man. Ballerina Cappuccina. Right?
That's very good.
Right? Ballerina Cappuccina, right?
I guess so, yeah. But
uh-oh. Did we lose Eduardo? What happened? Uh-oh. Amy, are you there?
Yep.
Technical difficulties. Hang tight. We had a camera drop, I guess, there in the studio.
No, I just had to there's a blind in my office, and if you notice, the whole one side of my screen is half.
Well, right as we're talking about Italian brain rot, Eduardo bounced off. He fell off. I'm not sure if he... Well, the only name I have here really is Ballerina Cappuccina, which is a ballerina with a cappuccino mug as a head who wears a tutu and pointy shoes. Very cute little character. And this meme. What's that? Right. Very fun words. The names, the descriptions they've come up with, and the characters they've created. I don't know if anybody's seen Skibbity Toilet. But
excuse you.
Thank you, Dave. Yeah, right. Yeah, that's it. That's one where they've got all these memes again and heads in these toilet It's really interesting, and they come up with some really interesting things there. I've sat down and watched it with my kids. If you got a couple kids, what's that? And they have a toy line, Skibbity toilet. So that's what I really need to do.
If you'll give me just a quick minute, I'm going to shut these blinds. The whole right side of my screen has gone white here.
Oh boy, technical difficulties once again with David Sousa. I don't know if our buddy Eduardo is going to chime back in. He fell over on his chair, I believe. Hope he's okay. Eduardo, if you're out there, man, I hope you're all right, pal. Anyways, so that's what brain rot is going on. It's just gone viral. It's taken over the world right now. And if you haven't seen it, there you go. Perpepa Team. Perpepa Team is another character. All right. Yes. So, anyways, these are a series of surrealist internet memes that emerged in the early 2025, characterized by absurd photos of AI-generated creatures with pseudo-Italian names. Yes, hybrids of animals with everyday objects, food, and weapons. And again, Oxford's word of the year, brain rot. And tum sabor. I don't know. Can everybody hear you, Amy, out there? I'm not sure, but this is the mental state of over-consuming trivial and unchallenging content, which is perfect timing for what is going on in our world with what mostly kids, children, and younger adults, and some adults too, are spending a lot of time watching that kind of stuff. And it's rotting your brain. And I don't think you have to be Italian either. You can be Scottish like me, or, German. It doesn't matter. Whatever you are. Puerto Rican, I don't care.
Eduardo just texted that his phone died, so he's asking to be excused.
Okay, yeah, we'll excuse you this time, Eduardo, but maybe we'll get him back on another show another time to answer
a little input about this Italian brain rot. Either I'm too busy or I'm just completely out of it. But the first time I'd actually heard about it was when you mentioned it right before the show today.
Yeah, well, Dave,
I've never heard of it before.
I'll answer your question. Are you too busy or are you just out of it? I'm going to say it's both. So sorry, man.
Probably, more than likely. You're right. Yeah.
You're in that office working your ass off. You're on the phone talking to a million people a day and doing deals, man. So hard to stay up on what's going on with the latest things on TV and the internet right now, because there's a lot going on that internet. So anyways, final walkthroughs, and this kind of segues into the last part of my our discussion tonight is about final walkthroughs in real estate. When people are buying a home, or if you're selling a home, the buyers are going to have what's called a final walkthrough, where we do the VP, verification of property, right? So we all get together usually about 3 days before the closing, and it's usually a very, very exciting moment for anybody, especially first-time home buyers. They're going to come in, and they're going to get to now see their house. They've been through the inspections, they've been through the appraisals. They, from when they were shopping for homes and they first saw and they selected, this is the one I want to go for. Let's do this. And now it's all coming to fruition. Their loan is approved, appraisal's good, the inspection's all checked off, and the sellers have done repairs or credits or whatever the case might be. And now it's coming down to that final moment where we're getting so close to getting the keys to your new house, So really exciting. But I've been in with some different buyers as we're walking through the final walkthrough, and just to see the excitement in their eyes. You see a mixture of excitement and concern. They're being very cognizant and looking around and wanting to know, hey, there are any new cracks in the windows, or I'm asking them too. Let's look around. I'm always looking at the ceilings every time I go in, and the fences. Those are always good things to look at. And the garage, because that's where a lot of furniture makes its departure, through the garage. And have they busted the door? Have they done, hit the little the eyes on the bottom, the little indicator lights? Those get tweaked a lot of times. And then when someone moves into the house, especially a first-time home buyer, they don't know how to adjust those darn things. And they're actually kind of tricky, but I've done a bunch of them. So let me know if that's a problem. We'll get you figured out there. So, and then as I was talking to Amy about this, she brought up a good point. She said they start figuring out what room is and what's going to go into each room, what and where, right? And when you have kids, when these are families moving in, they're all picking out the rooms for, mom and dad, of course, taking the master, right? I'm sorry, we can't call that the master anymore. It's called the primary bedroom. My apologies, everybody. The primary bedroom. And then the kids usually, you got the boy, the girl, right? And they got that Jack and Jill bathroom right in the middle. Oops. Did I say Jack and Jill? I did not mean to say Jack and Jill bathroom. I meant to say adjoining bathroom. Okay, that's another word that's been taken out of our real estate dictionary for descriptions. Anyways, didn't know if you knew that, but that's why you may not see those descriptions in the MLS anymore, because it's a no-no in California anyways. So, but to see the excitement, the concern, and it all starting to come together. And as Amy was asking, and picking out rooms and figuring out, the technology, how this is all going to play into this house, this new house that they've got, because they're going to have kids watching the big screens, they're going to be doing home theater in one room, or do we want a room where we could actually see and hear what they are watching and listening to, right? Where's the homework going to be? Where are we going to set our cell phones, and we want to charge them up, plug them into an area where they're all charging and all these kind of things. There's just so much thought with the technology even, and smart home. Do you have a smart home? Do you have a pool? Do you have the cameras, the security system on there? All these different things and thoughts is so overwhelming, as you move into your new home, especially your first new home. It's really something else. So I'm always excited to help anybody get into a new home, even if it's a move-up buyer or someone downsizing. It's interesting to see their, the emotions and how they play out. And I get to witness all that. And that's actually a pretty exciting part of real estate, to be honest with you. So I really enjoy that. So anyways, well, I think I've pretty much covered all. Dave, do you have anything you wanted to add before we say goodbye to everybody?
No, just listening to the podcast. Very, very good information. And needless to say, Cash and I work together, and we have for a long time to be a resource to everybody. So if you have real estate questions, you have mortgage or financing questions, or anything to do with the markets, reach out to Cash. He'll put you in touch with me, and together we'll make sure that you have all your questions answered and your bases covered.
Absolutely, Dave. 100%. Just let us know any questions, thoughts, concerns, anytime. We're here to help and be of assistance to you in any way of that.
In the meantime,
remember,
watch out for that Italian brain rot.
And watch out for that Italian brain rot. And remember, if you want more cash in your life, just hit the subscribe. Thank you. See you next time.
Thank you, Cash.
You betcha. Thanks, Dave.